Let's take the discussion on economy and markets further, and joining us now today are Rajesh Cheruvu, CIO at RBS Private Banking here in India, and McFarland, Chief Economist at Coutts, who's visiting Mumbai right now all the way from Hong Kong. Gentlemen, good evening. Thanks a lot for joining us. Mark, let me start with you. RBI Governor, as we just were talking about, clearly indicated that India is in a gradual recovery process. What are your initial thoughts on India growth recovery?
Sure. We were quite optimistic about the outlook for India, particularly at the corporate level. I think the macro level has been a little bit clouded by the introduction of new GDP numbers. I think it'll take some time for those numbers to find their natural space. But I think from the corporate sector outlook, we can look forward to an improvement in earnings per share over the next 12 months that should give India quite a good underpinning at the equity market level.
Rajesh, let's talk about, the targets that you folks have set for the Nifty. You actually expect the Nifty could possibly scale something like 10,000 in the next 12 months. What's really led, you think, to that kind of optimism, and what will drive that move?
Yeah, next 12 months we believe index to exceed 10,000 levels. Primarily that would be driven by earnings recovery that we expect it to start from December 15 onwards, earnings likely to pick up. And economic reforms, whatever actually government has implemented so far, I think that would translate into the change in overall environment, and economic growth is also likely to pick up. So whatever measures government has announced largely in the last 12 months, there are actually that would have implications over medium to longer term. There are not many of them are actually short-term implication, short-term actually impacting. Yeah. So given that, I think probably over next 12 months, we believe earnings recovery, economic recovery likely to actually take shape up. Also, I think whatever rate cuts we have seen, policy rate cuts we have seen, that would also translate into lower interest rates and provide additional space for the demand recovery. So combination of these factors, we believe the index to rise to 10,000 plus levels over 12 months.
Mark, we're also talking to you folks on a day when, you've released your investment outlook. How many countries have you studied, and where does India stack up amongst emerging markets?
Well, what we never do is introduce pecking orders. We don't do hierarchies of markets we like and we don't like. What we typically do is look at an average portfolio and place country bets relative to a benchmark. So India would join China, Singapore and Japan in Asia as an overweight position in a portfolio, and on a global basis would join Europe and certain sectors of the US economy as overweights.
Right. Mark, what are the indicators in the Indian economy and in the Indian market are telling you, especially on the recovery part, how much is it sustainable? Is it sustainable? Do you think, is it not fragile?
I think it's quite sustainable, but I think you need to look at India really as a long-term investment story. I think there were a lot of foreign investors at the end of 2013 who thought that Narendra Modi was going to be a big spender, one of those big ticket type administrations that come in and change everything in a great big bang. I think that's wrong. I think you need to think about incremental change. I think you need to think of supply side changes similar to the Reagan government in the 1980s in the United States. And that takes time to really gestate. It takes time for those measures to really start to make an impact at the corporate level. And I think from that perspective, you need to think of India as a 2 to 3 year investment. But I do think that the returns can be quite handsome.
Right. Rajesh, share with us your top sectoral bets or even stock bets that you expect could outperform over the next 12 months.
Actually, 12 months we have not worked that way. The way we have actually categorized our sectoral outlook at this point of time over next 6 months, we continue to believe we have been holding this view. We believe I think next 6 months also that view would actually work for us. Specifically, interest rate sensitive and export oriented sectors continue to outperform. Okay, as earnings recovery is visible, I think probably that point of time, I think probably just we might shift towards something cyclical sectors that point of time. So we have been waiting for the earnings recovery to shape up. For now, we believe interest rate sensitivities, specifically financials, consumer discretionary, export oriented sectors like information technology and healthcare continue to outperform broad markets.
Right. Mark, you talked about how we're going to see a recovery as far as corporate earnings go. By when do you expect things to actually pick up, and how long before, it begins to reflect in the numbers themselves?
Well, we believe that the earnings recovery could probably start in the first quarter of next year, or maybe the last quarter of the current calendar year. I think the major catalyst for that is a continuous gradual reduction in Reserve Bank of India interest rates and the cost of capital in India. I think also the banks are, through the recapitalization fund that was recently announced, going to be able to start reducing their NPL levels. And again, I think that adds to momentum in the economy through more lending. So I think generally those two things tend to make you more optimistic about the outlook for Indian markets.
And Mark, how convinced are you about what you're seeing from the new government? 1 year in office, and much is being said about how somewhere the reform drive may have lost its momentum. How are you looking at things?
Well, I think as I said before, the major way of looking at India, and I think the correct way, is as an administrative improvement on what went before. Deep reforms over a prolonged period, but gradual, which make a meaningful difference to the ability of companies to do business effectively and to be productive. And I think India is at the beginning of a long phase of improvements, and I think those will be of great benefit to the country, and I think that's been a great hit. It took a while for foreign investors to understand, or even some retail investors to understand that's what was happening. So I think that's been a good move. I think the slowness in getting foreign direct investment into the country is one area where it's a bit disappointing. I think we had expected the FDI sector to be opened up more quickly and more aggressively, and it's certainly an area that India could benefit from.
Right. Rajesh, I'll let you have a word on the liquidity front. How do you expect fund flows, especially from the FIIs, coming into our market going forward?
If you see, I think till March or so, I think just we have seen pretty healthy flows. So that has helped, I think, index rising over 9,000 levels in Nifty terms. But of late, these MAT-related issues, and then I think later monsoon-related concerns. Then I think the government deferring the passage of key legislations like land, labor, real estate, GST bills to monsoon session, etc. Combination of these factors, actually, we have seen some amount of hold, some amount of external flows seems to be halted for now. Post, I think, monsoon sessions and followed by, I think, probably Bihar elections, etc. We might see, I think, probably the government also getting into, I think, probably in a comfortable zone, etc. So that is the time, I think, probably they would announce a slew of economic and fiscal policy reforms. So that is the time, I think, you might see some amount of recovery coming in foreign flows. So for next 2-3 months, I believe, I think, probably markets continue to be range bound. So that provides, I think, excellent entry opportunity for medium investors who have, I think, medium to longer term horizon.
Right. All right, gentlemen, Rajesh, Mark, both of you, thanks so much joining us on the show today.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.